Hi, I'm Gary Flater with GaryFlater.com. Do you remember October 19th, 1887, Black Monday? I certainly did. Stock markets all around the world, starting in Hong Kong, began crashing, giving up huge amounts of value in very little time. The Dow Jones Industrial Average dropped 508 points, which is a 22.61 decline, and that's in one day. Well, the top four largest daily declines of the Dow Jones are as follows. October 19th, 1987, down 22.6%. October 28th, 1929, down 12.8%. October 29th, 1929, down 11.7%. And then November 6th, 1929, minus 9.92%, so almost 10%. Well, I tell you, I don't know what's going on with October or early fall. It just seems a bad time for the market. Well, 25 years later, it's really hard to believe it's been 25 years since the single most terrifying day of my business life happened. But what seemed as a disaster for the stock market in this great country of ours just turned out to be a blip on the charts nowadays. Today, the market closed at 13,343 points, and that's down 205 points or 1.52%. So October 19th, maybe we just ought to get out of the market and take that off from here on forward. Let's talk about some factors causing that crash, or potential factors. A lot of the experts have cited program trading, overvaluation, and market psychology as factors causing the 87 crash. Well, program trading. It seems that the majority of our experts want to blame the 87 crash on program trading. In program trading, computers perform blindingly fast trades based on external inputs with little to no human intervention on that. As technology became the norm, the use of program trading grew on Wall Street. After Black Monday, many blamed the strategy as blindly selling stocks as the market fell, in effect pouring kerosene on an out-of-control fire. Overvaluation. Well, the years leading up to that crash, equity markets have been posting strong gains. Increased prices outpaced earnings growth and caused PE, or price earnings ratios, to rise. There had been an influx of new investors into the stock market, and that increased demand supported those prices. The United States economy in 1986 began to go from a growing recovery to a growing expansion. The stock market rose significantly, with the Dow Jones Industrial Average peaking in August of 87 at 2722. And that's a 44% increase over 1986 close of 1895. Well, the market psychology. The Dow Jones Industrial Average actually started its decline on Wednesday, October 14th, and that happens to be my lovely wife's birthday, so can't blame it on you, Karen. But when it dropped 95 points, and that 95-point drop was a record at the time, to 2412, and it was down another 58 points on Thursday, which put it down over 12% from the August high. Friday proved to be another losing day as the Dow closed down over 108 points, and it ended the week at 2246, and that was on record volume. It wasn't just thinly traded stocks. Well, that weekend proved to be a very long one, with investors worried about their stock portfolios. The crash began in the Far East on Monday and spread through Europe and finally hit the United States after the other markets had already dropped significantly. Wall Street woke up to a tremendous amount of sell orders put in by investors over the weekend, and it was all she wrote for it. Turned out to be the single largest percentage decline in our stock market history, down 22.61%. Well, after the crash, many experts and economists from all over the world were predicting depression-like times of the 1930s. That, however, as we all know, was not the case. The Dow Jones Industrial Average ended 1987 on a positive note. It started January at 1897 and closed December 31st at 1939. But it took the Dow Jones Industrial Average almost 2 years to get back to that high of August 25th of 2722. So what goes up comes down, what goes down goes back up again. And I end all these, as you know, with a quote. And this one's from Sophie Tucker. And she says, "I've been rich and I've been poor. Believe me, rich is better." With that, Gary Flater, GaryFlater.com. Take care.